Good morning, everyone. This is Brad Matheny. Today is the 8th of May, Thursday. Boy, weeks going by quickly, and California has warmed back up. So funny, we went through a cold weekend with moderate rain on Monday, Tuesday, and then yesterday we warmed up to about 83, and today we're going up to the 90s. So, it's nice to feel the sun, but boy, it's teasing us that summer is coming. Those 104, 105 degree plus days are coming. Okay, so where we're at today, I left off on this chart yesterday with my post FOMC data. Very interesting move to see overnight. In fact, you can see it here. Overnight, we have the S&P rally quite strongly to the upside. Rather interesting, obviously, with the Fed not making any rate changes and risk assets, really gold and silver, really seeing some kind of a decline yesterday. It's almost as if the markets are moving away from these risk assets right now and into US based equities right now. That's why we're probably seeing this pretty strong little move in the ES and the NQ. NQ's up 1.3%, and the S&P's up about 1% right now. So, overall, though, we're still in that big, broad consolidation pattern. So, come back out here to hourly, and we're up above that range that I talked about here. But remember, we have that ultimate consolidation range setting up over here, and we are retesting those ultimate high levels right over here right now, very close to retesting those. And it's going to be interesting to see how this plays out, because if this is the ultimate high and we continue to get this rejection, then here's our flag. Remember, we had talked about this a while ago. Get rid of some of these, show you. But, I mentioned to you that we would be looking at a downward flag setting up in the markets, coming down and then rolling up into a flag before we saw a breakdown, possibly into consolidation, before we saw a breakdown even further. And this looks like our flag. So I'll mark this right here as flag. Question mark. This looks like our flag. If we get a breakdown from this point, I would be looking for the SP or the ES to break down below this level into consolidation down in this range. So really kind of like this. As a potential downward consolidation range, and then trying ultimately to maybe get down below this level into this level for the ultimate breakdown. So very interesting that we're getting the flag that I was talking about. And now we have to see if we, what's called invalidate back to the upside, which could happen, or if we break down into consolidation, which is most likely to happen at this point. If we invalidate to the upside, then, we're looking at a move back up here to this high. 580, 53 or 58, 34, 50, roughly, right up into this ultimate high or this range high right up here. Still leaves us within consolidation range. This is the big broad consolidation range between this level here, this level down here. So we shall see how this plays out. Very interesting upward movement. I got to be honest with you, I didn't really expect to see this upward trending take place. A lot of people writing me and telling me, "Oh, the bottom is in, Brad." I hear you, but conformatively, until we get outside of this range. This is a 4-hour chart. Until we get outside of this range, this red line here and this blue line down here, until we get outside of that range, we are still in this consolidation zone. So it's a big, wide consolidation zone, but it is structurally, it is a consolidation zone, which tells me that we are not trending yet. Okay. And I'm going to be hard pressed to look at this any other way, simply because of the excess phase peak pattern that's set up over here, reaching up into here, flagging over here, breaking down into consolidation. And until we get out of that consolidation range and either rally back above the high or break down, I'm going to be hard pressed to say anything other than this is wide range consolidation. Very wide range consolidation. So we need to see how this plays out. And again, I see this as very volatile consolidation range. So again, it's hard for me to argue anything else. It plays into my original analysis from months ago very cleanly. And, this little rally push higher could end and move very quickly to the downside if this flagging setup that I highlighted right over here plays out. This is a nice, clean little flag. If we reject up here and move down into mid through May, you know what? That would make sense. Back to the downside, retesting support somewhere down in this area, maybe down in this area here, down below this low. And in fact, I'll draw this cross here, make it blue. And again, that's what I'm leaning towards, ladies and gentlemen, is that we are going to stall up in this area and break downward. It makes a lot of sense to me, knowing that we're in this consolidation range. And again, here's the ultimate high back over here. And this right now is our ultimate low. Okay, so let's take a look at the patterns. Pattern today for the SPY is a carryover in carryover mode. Given what we saw yesterday with the, mild, this is 4 hours, so come back in here and take a look at yesterday. Spread this out. Yesterday was pretty flat, okay, down in this area. Overnight, we've had this big rally back up into this area, really retesting these upper ranges up here. But yesterday was pretty flat. And a carryover in carryover mode would indicate, moderate sideways downward trending. We were at 61, 561.15. We're currently at this SPY, currently at 566.35. So we're quite a bit higher right now on the SPY. And like I said, here's the consolidation range here. And the consolidation low down here. So you really have this level here. And until we break away from that consolidation zone, this is the chart I did yesterday, the post FOMC chart. Get rid of that. Get rid of this. Until we break out of this range, we've got the ultimate high setting way up here. And we've got the ultimate low setting down here. And again, until we get out of this range, the consolidation range, in my opinion, we've got a very good chance of flagging and breaking downward here. So we're looking at a higher open. It's going to set up a flag. So a higher open sets up a flag coming up like this. Possible breakdown into consolidation, possible breakdown into ultimate low. Okay. So there we go. Let's take a look at the QQQ. Same type of setup. Looking now at a flag right over here. So we've got 489.75. Whoops. Coming up here, rolling into that flag right here. Then a possible breakdown into consolidation, and then that breakdown into the low. So there you go. Now, why do I think this consolidation range here is going to play out, this yellow area? Because this Fibonacci 382 to 618 level is fairly critical. You can see that we've reestablished this range almost perfectly, come right up to that 97% level installed, which is a fairly key level, guys. It was taught to me by a guy many years ago. I'm not going to say his name, but long and short of it, Fibonacci has this 97% and 0.35 roughly percent level where these double topping, double bottoming setups can happen. So this is technically a double top right across here. So what we will see here is how we play out. We're coming back up to kind of retest that double top pattern right now. We're just off of it slightly. But if we flag out here and roll down, could be a very exciting breakdown move. Okay, we'll see how it plays out. Okay, gold and silver are down, rolling a little bit higher. Nice to see gold hold up above the 3,300 level. We'll see if we get more pressure today. Silver's below the $33 level again. It's what can we say? Metals, like I said, right now are just, I see them as struggling to get out of their own way, so to say. But especially silver. I mean, let's go to 4 hour silver and 4 hour gold. You can see that, we've been really sideways bound in gold since May 21st or so. And you can see we've been sideways bound in sorry, that's May 21st, April 21st, and same thing over here, April 21st for silver, 23rd. We've really been sideways bound, trying to break out of it. The reality is once this move settles, and we do get that move to the upside, which I believe is coming, it's going to be a pretty explosive upward move. But this whole month, metals have been very flat, very sideways compared to where we were back over here, having these big rebound moves back to the upside. You can see this big rally phase stalling, and based on my analysis, you saw we had the same type of move back over here, really with gold rallying up out of it. What we're seeing here is that sideways kind of flagging. Remember, price only trends or flags. So we've had a little bit of a trending mode here, but really kind of flagging sideways. Once we get that breakout, really, of this channel right now, and for here, it is, it is this channel right across there. Once we get that breakout of the 33.66 level on silver, or at this point the 34.32 level on gold, trying to then get above this 35.01 level or 35.05 level, then we are going to get a big move in metals. So today we're looking at a blank pattern in bullish trending for metals. We have no real definition of a pattern until Monday, where we get a gap stall revert flush. The gap stall revert flush pattern can be any one of these. We definitely would love to see more of a flush pattern to the upside, but we'll see how we get activity over the next day or two. We're looking at some upward trending right now on these 4 hour charts. You can see, spread them out. I'm hopeful that gold and silver are going to make a move now higher after the Fed came out and said, hey, they're not going to do anything. But we will see. Like I said, in my opinion, metals hedging against global risk still puts gold up in the 4,200 area minimum. And I think silver is going to just tally right along and probably be up in the 37, 38, $39 area here before too long. But this stalling really, has played a bit of havoc in the actual trending. It's almost like the markets don't want to admit the amount of risk that's actually out there given where gold is right now. So we will see. The next move could be very explosive. And then lastly, we're going to come out here to Bitcoin. Bitcoin is up $2,300. Wow. We've obviously broken into an invalidation phase. Let's come back over here. So this is a very clean invalidation. At this point, you can see how we've invalidated across this high. We are bullish. Bitcoin still have been since we broke above this high right over here. So let me put an arrow right over here. We have not really seen, we've been looking for that, that breakdown over here with this flagging. But this flagging is in an upward trend. So this flagging is still bullish. We have the breakaway or the invalidation. This is classical invalidation. In other words, we've gotten above this red level high right here on a good solid breakaway. This is invalidation. It doesn't mean that these potential areas are no longer valid. These could happen still on a pullback, especially if we were to roll over into another flagging formation over here, which could happen. But at this point, invalidation means we are moving to try to find a new ultimate high up here. So at this point, we would be looking at rolling invalidation up to try to find some high up here in some new higher level. Okay? That's invalidation. This is very clean invalidation. Broke above it, strongly above it. Now you can see that we're right up at this double high. Puts us a little pause for concern to maybe take profits here, but this is a good solid invalidation move to the upside. No longer, do I believe this excess phase peak pattern is valid. It's over, it's done, it's ended, and we're going to be moving up into this continued bigger pattern here, the blue pattern, trying to find the ultimate high. Now, the ultimate high of this pattern should be at or below this level. So as we move forward, if we're going to set up this big flag over here, this big blue flag that I'm showing you, it's going to be below this red level at 109, call it 330. So somewhere over in this area, likely to set up this flag as we move higher into this secondary ultimate high over here. Somewhere over here, we're likely going to try to find a peak and then roll into this flag. Now, obviously, this is a big flag, a big excess phase peak pattern, right? So what happens if we go higher, Brad? If we go higher, we invalidate to the upside. If we go lower and we conform, then we are conforming to the downside into consolidation. So that's what this flag is telling us. This flag right here is bullish. So understand that this type of a flag right here is bullish. And it means that we should be looking for bullish activity, but be, in other words, trying to trade the primary bullish trend. But we should also be cautious of the fact that we're going to reach a peak, potentially an ultimate high, and we are going to roll downward. Okay, so just like the same scenario we're in right now. We're in this bullish trend. We're in this bullish flagging. We're going to come up probably up into the 101, 102 area, trying to find maybe a little higher, trying to find resistance. It is a bullish trend right now, but we need to be cautious of the fact that we are going to roll into that flagging formation. So when you get into a move like this, you get into these new high, pullback, flag. Breakaway invalidation, new high, pullback, flag. Breakaway invalidation, new high, pullback, flag. And then eventually we will get the breakdown into consolidation and then the new low. Okay? So where we're at, guys, that's about it. 20 minutes. I'm going to let you go, get my cup of coffee. Let's see how the day goes today. Again, kind of looking for the markets to weaken off of these highs. So we'll see. I think we're going to just end up, weakening downward off of these highs. It looks like the S&P is already down just a little bit, about 0.2% from what I saw this morning. So we'll see how everything plays out. A reaction here to the Fed, a relief that they're not doing anything. This might be a little bit of a relief rally to the Fed's not doing anything. But as I showed you yesterday in my post FOMC video, I am still hard pressed to see what's going to drive this economy right now while we still have the tariff issues working out and a lot of uncertainty. But I do believe that the end of this year in 2026 will be very powerful. Okay, guys, that's it. Go get some today.